Good morning, everybody. It is month end, April 30th. It's Wednesday. We just had ADP come out, and we'll look into that and the week ahead. First, a quick reminder for everybody that derivatives trading is inherently risky and past performance is not indicative of future returns. Now, if we want to start with, as we typically do with the the S&P 500, we did see a little bit of uptick on volume yesterday compared to the prior day. As we made our push to our line in the sand at 55.91. But over the last 5 days, we're still down 10%. So again, that up move these last few days has been more forced coming into the data as there are less participants. If we look today here, and we can take a look where we are in terms of our minor and major line in the sand, we are in between them. And so that tells us to look for more choppy price action, likely as it's going to be harder to get outsized moves in between there. We have a group of sellers at our major line in the sand at 56.04 this morning, and then our minor line in the sand is at 55.25. So until we break out of that 75-point range, expect more oscillation between there. Our rotational zone today is 55.97 to 55.34, so just inside of both of those lines in the sand as well. And then if we do happen to break out, our upside targets would be 56.28 and 56.46, and our downside targets would be 55.03 and 54.85. And if we do break out to the downside, we will see volatility increase, so that range could expand as the day goes on. We do have a lot of catalysts today. We just had ADP come out with 62,000 jobs, and as we are seeing the employment numbers contract. Now, over the last 18 months, that has typically been inverse to NFP, and NFP comes out on Friday. That is what the Fed's going to be looking at for ahead of their Fed meeting for rate cuts. And if that's a dovish print, again, we will look for rate cuts to be on the table, even though Powell has signaled that's not going to be as likely. We are seeing traders begin to bet on that as the 2 years been going up the last few days. So getting long the ZT or the TUA is depending on which, if you're using CQG or Rhythmic data or whatever data you're using, that 2 year has been a nice long. Continually, as traders will put on and take off those rate cut bets. So anytime we get down to our lower range expectations, that's what we've been looking for. Other levels that we want to pay attention to here. So we are under VWAP and inside of our value for the day. We'll look for breakouts of that. Again, the better numbers to watch are going to be 55.25 and 56.04 for more clarity. The bigger areas that we want to be paying attention to today in terms of other levels. And so we have our rotational zone aligning with our lines in the sand, but we want to be watching at 55.40. Again, that was where we started that move yesterday and that compression. If we look at, let's turn off the values there. So if we look at where we started this move yesterday, we kept coming down to that 55.40 and kept pushing up. And so if we break that, that's going to be an area to watch closely. And on the upside at 55.80. Which is around Globex high. That's what we want to be watching for as well. There were signs yesterday that we were going to make an upside move. We discussed that with some of our students from our courses, but there were the breadcrumbs left behind that the commercial side of the market was positioned in a way that they either would want sideways to upside in the market, and that played out perfectly. So now today that is off the table. So now we have opened that potential for the downside after we've hit our line in the sand. Again, not looking for the big downside yet, though, as we will see the earnings. But these are the things that we are watching for and paying attention to. And then in terms of, let's go to the NASDAQ here, very similar. We are looking on the NASDAQ. We are above both of our lines in the sand, so that's the difference with the ES and the SPX. So our line in the sand is 18,982. You can see that right here. That is that key level, and that is below our range expectations today. So we should be holding our line in the sand on the NASDAQ today, which should dampen some of that volatility as we come into earnings. We will, for our professional subscribers, be putting out an earnings look ahead and levels you can trade on the NASDAQ. The NASDAQ is typically better for trading the earnings as you get the bigger moves on the less liquid instrument. On the ES, it's not quite as good. The ranges are a little bit smaller, and you could take more size, but you get the better moves, the higher volatility moves on the NASDAQ. So that's what we'll put out this afternoon as we come into earnings, and then we'll do the same again tomorrow as we come into Apple and Amazon earnings tomorrow. So today, again, we've mentioned this week that we've been looking for that. We mentioned this yesterday. We were looking for that insurance buying to come in. We saw that come in yesterday, and then once that was done, then the market had the that demand taken out, and so then the insurance providers could push the market up. And today, again, we are still underinsured. We're just barely insured. So that does open the window for that downside potential. We are starting to see it get into the red zone here. We mentioned that yesterday for NFP. That's what we're really watching for. And that should get up to around 40 to 45. So it's around 27 now. We should see that still another 10 points or more up. And that will continue to put in that downward pressure. And we will see the insurance providers oscillate the market for those reasons, as they would sell the insurance at a higher premium, move the market up to collect that premium, and just go back and forth. The other levels that you want to be paying attention today on the NASDAQ, and make sure you guys are using these tools that you have access to if you're one of our professional subscribers, as these will help you to understand the key areas to be watching for. We will be watching at the 19,363. That's going to be a big level for us. 19,633. That was, again, a big level from the other day. 427 will be one on the NASDAQ. If we do make a downside push, like a bigger downside push, 19,222. And if we do make an upside push, 19,740. So those are going to be the big levels on the NASDAQ that we want to pay attention to for the days ahead. In terms of the other charts we showed earlier this week, there hasn't really been a change to high yield, to bond volatility. Those are still pretty flat, so no change in any of those charts. Today, we'll show those again on Monday. We'll dive into those. So on to crude. We are below our line in the sand, making a push lower. We want to be watching this lower edge here at the 57 to 58, which is where we would expect support to come in. And remember, at 55 is where we would watch for Saudi Arabia to step in. That's typically what their economy is based on, is oil at $55. So as we pulled back there, back here in April, we came down to 54.90, I believe it was, or maybe it was 55.01. But we bounced right off of that. Again, that's where we expect that bigger defense to come into place. And that's what we'll be watching for. But oil typically doesn't stay below its line in the sand for more than a couple of days. So we'll be looking for a retracement move here. Maybe after inventories today. Inventories are at 1030 on oil. But the better trending move is going to be downside. So we're looking for bounces to short at the moment until we get over that line in the sand. And then on to gold. We are consolidating. I wouldn't look for a large trending move until after NFP. We could see a move. Our key here is getting outside of our rotational zone, which is the highs at 33.33 today. And then we would look for, if we can start seeing that upper edge move higher, and we start to see, instead of a cap in the market at 33.77, start to see that back over 3,400, then we can look for more of a trend. So we'll be watching the shape of our levels here as we go ahead. And our lower rotational level is almost where price is right now. It's 32.77. We are at 32.87. Again, we'll look for a more trending move to take hold as traders are positioning. We're seeing this consolidation of range going into all these catalysts. We have Trump four times today um, between, I believe, 11 a.m. is the first and 8 p.m. is the last. And so we have a lot of potential volatility, and traders are going to position, but really all eyes are going to be on NFP because everybody wants to know what to expect from the Fed next Wednesday. So while we have all of these catalysts that are going to move and we can watch our insurance trades, for trends to really start taking hold again, we're waiting for after month end today. So we had the month end markup yesterday. Um, that won't that won't affect as much today. I don't expect as much markup going into the actual last trading day because of settlement and where positioning was. We had a lot of that markup yesterday, and again, we aren't looking for much of a trend ahead of the big earnings starting. People will likely keep the market more contained, but we will have uh, Trump and possibly Bessent out on their pump the market tour as they've been trying to push the market up for that liquidity going into month end. And we have a lot on the table there. So that's what we're going to be watching today and tomorrow. Apple and Amazon earnings tomorrow and natural gas inventories. And then Friday's really the big one again. NFP is going to be the key for interest rates. So all else being equal, follow the rotational zones, follow your own levels and plans. If you have questions, please post them in our room. We're happy to try to help and respond. And remember, the only thing we control in this is our risk. So we have to, first and foremost, make sure we're not over risking and over leveraging ourselves on any day, especially as we're waiting for bigger data the rest of this week. So have a great day, guys, and stay safe trading out there.